Hello and welcome to Leviathan News. It's November 28th, and as Garrett says, it's the first day of the rest of our lives. And I got Big G here, DeFi advisor. What's going on?
All good. What's up? How are
Exciting
you
day.
guys?
Is that right? Did I nail your intro?
As usual, did it better than I could have.
No, I like when you do it. It's good. It's got a
Yeah,
nice
Garrett
ring
does
to
the best intro, honestly.
it. It's better than mine. It's much better. Yeah.
Well, I guess they continue being sick, and maybe maybe we get a chance to hear
Now,
more.
So we got a full lineup today, and we'll get started right away. Right, we have to start Boss Imp from Dopex, and welcome.
Hey, thanks for having me. Happy to be here.
So before I pull up this awesome little Dune chart that we have for Dopex right here, maybe get a little story. Oh, hey, we also got Magistyle as well too from Timeless, who we're gonna get to in a second.
Hi guys, very happy to be here.
What's going on? So I think like it's actually kind of similar in having you guys both on, in that the projects, both your projects are doing different things, but they're trying to solve for like one of the bigger issues that we find in DeFi, which is like how to find decent yield on LP strategies. And Dopex is doing it with their option system, and Timeless is doing it with their Uniswap like meta governance system. And so we're going to talk about it today. So, Boss, what's going on, man? How you doing today?
I'm pretty good. We had a lot of new launches a few weeks, so
I know.
we kind of are
But-
like at the yeah.
But who are you? You haven't been on the stream yet, so maybe you can give a
Oh,
little
okay, yeah,
introduction.
sure. Yeah, sure. So I'm Basim. I'm an ex TradFi. I used to work in investment banking and in risk management, and also in fintech, both also in risk management. Worked on interest rate derivatives, FX products, structured products, and options. I'm an advisor at Dopex, mostly on quantitative and strategy issues, and I've been full-time crypto for 3 years now, mainly as an option trader, investor, and advisor, contributor to some protocols, but full degen at heart.
Yeah. So we also got Magistyle as well too. What's up, sir? How you doing?
Hello, sirs. I'm very happy to be here. I just saw that we have a screen at the center with all of you. I think my VPN was blocking, so very happy to see your faces and to be here.
Yeah. So both you guys are working with concentrated liquidity, but in different ways. And we'll start out with Dopex here. Dopex has recently launched Clam, which is the concentrated liquidity automated market maker, back at just like today's the 27th, so just like 2 weeks ago, really. And I've got a nifty little Dune dashboard that's showing the growth of TVL there. Here we can see that it's gone from 1 to just over 2 million in a couple of weeks. And I think that the open interest has been pretty cool to see that's open interest. Red line is open interest. Blue line down here is available liquidity. The thing that I've seen people spamming on crypto Twitter, though, has been the amount of fees that have been collected by the Clam down here. So the cumulative protocol fees across all the different sets have broken about 15K during that time period. So pretty cool to see the growth of this new product that you guys have over at Dopex.
And also, like something on your screen when you just show the trader P&L, like we have an amazing trading P&L. And what is most fascinating about this is LP don't have to lose for traders to make money, because we just sell the payoff of Uniswap v3. So if you LP on Uniswap and you edge your exposure, or there is a global strategy for your portfolio on your portfolio for LPing on Uni v3. You just make the same payoff, you just make more yield, and trader make money. So it's win-win situation. And this is what's great about Clam, is no one has to lose. In traditional options, when you have like an AMM edge risks, and usually when you check like major protocols, the AMM is poorly doing or not rewarding enough LPs for the risk they're taking, being short vol and short gamma, etc. And if you have like a massive fat tail event, they're gonna end up losing a lot. Here it's not the case. Like our benchmark and UniV3 is naturally giving us this payoff, and it's great for them because they get more yield, traders get good exposure, good leverage, and everyone is happy.
So is the TradFi guy coming to the like crypto option space? Like, what's your impressions of it, having seen these products now? Because it's like what's like something. It's kind of like apples. I don't want to say apples and oranges because they're very similar, but they are different products at the heart. I mean, like a pure like call or a put is much different than like an LP position. They share similar like profit profiles, but the risks are different ultimately.
Yeah. So like for me, the main problem with AMM, pure AMM, is the scalability. We need a lot of capital to make it work, and you're not rewarded for the risk you're taking. So as an option seller, I'm not really I don't have any appeal to be in AMM. I would rather have my portfolio margin, handle myself my risk, do more complex strategies, multi-leg strategies, and leave that to true market makers. But I don't think like automatic market making makes sense in the option space unless you have something additional like CLAM and using like not only stable as a benchmark but UniV3 as a benchmark. So even those market makers can come and can deposit a hefty sum in UniV3 and use options, long-term options to add short-term exposure, or they have some kind of strategy or whatever like that have pieces with UniV3 and they will lend us their liquidity and we'll optimize it and we'll have traders use it. So that's what's great. And I think like for me, the second point in the options like market and DeFi, like crypto in general, option market are the fees. For me, the fees are killing me when I'm doing like a 4-leg strategy, for example, on Deribit. I will for like long term, or I want to do spreads, or I want to do whatever. I'm gonna pay fees as high as 10 times what I'm paying in TradFi. And for some strategies, I'm gonna pay $10 in premium, but I'm gonna pay $2 in fees to open, $2 in fees to close. That's 40% of my initial paid in fees. And I think one of the challenges and one of the growth potential of on-chain options is to compete with Deribit on fees and to make it cheaper and to cannibalize Deribit on that and the big centralized exchange, because they have a monopoly and they have players using it. But one of the vector of attacks would be fees and to drive volume on-chain potentially if they manage to do it. And that's what we will be trying to do with Dopex later on, with when we develop and build on top of CLAM for like longer term options and more diversified options products than CLAM.
So what's actually happening with the CLAM? So you're depositing liquidity on Dopex, and what happens then?
So you deposit liquidity. For now, you can only, like how it's structured. Basically, you have a range. So in UniV3 you have a range, like I don't know, $100 range. How Dopex works is it's gonna divide, like UniV3, it's gonna divide your range into ticks, and each tick will be used to sell an option. And the tick is so the tick will be used to sell an option. So when you deposit, right now you can only deposit ticks with us, but in the near future you'll be able to deposit directly a range. We will redeposit it at tick. As ticks, we'll be using each of your tick to sell options. This means when you deposit in UniV3 and you have only a part of your range is active, I don't know, 10, 20 ticks during the day. In Dopex, you can sell options on all your ticks. So you have higher utilization of your LP across the board. And that's the first optimization. And the second optimization is sometimes fees and volume are not enough in UniV3. They don't compensate you enough for the risk you're taking. They don't. They are lower than the volatility, than the expected volatility or the implied volatility by the market. So if you sell options against your tick, you may earn multiple from the fee. Sometimes it obviously depends on the volume. If you have a day with like a gazillion volume, your LP may earn more fees than the premium, and it depends also on on the range. If you're selling on the ticks on the outer bounds of your range, maybe you'll earn less premium than fees if the price were to move there. But on average, with selling premium and having higher utilization, you will make multiple over your fees, over the fees you're making in EV3. We have seen 70, 80, 100% APR on some ticks, but the average was around 60, 70. Even on a big range, you can make 60, 70. So,
and that's in addition to the Uniswap V3 fees too, right?
No, that's basically what happens is when an option is bought, your liquidity is removed, because for us to offer the same payoff as an option, we need to remove the liquidity, and we'll be selling the impermanent loss as an option, and they have the same payoff at maturity. What means if the price goes into the money, UniV3 will deliver the same payoff. But if the price doesn't go in the money, it's not the same. It's not exactly the same payoff. But what we matter is if we are in the money or not.
Right, and then you also have the Arbitrum STIP grant that's going on right now. Did you guys get 1.5 million ARB for the period?
Yes, that's it. We got 1.5 million. Thank you. We got over 200 million votes. Actually, I think we were like the third most voted protocol, and we were the first until like 1 hour before the end of the vote. We got 600k ARB that we are using for CLAM, and I haven't talked about this until now, but CLAM, there is something I don't understand personally. CLAM APR is paying over 200%.
Oh, wow.
And sometimes even 200, 300%, because we have 2 million liquidity right now, and we have almost 10k ARB given every day. That's 0.5% daily. That means 180 yearly. And this is not on all the liquidity, because we incentivize only 2.5% around current price. And so it means 200, 250, 300 APR on average, and liquidity is not growing enough. I think this may be one of the problem of this TIP is we showered with the system with so much money. There is high APR everywhere, and for some reason, TVL is not growing as it should be with this much incentive. So liquidity, we're currently we're growing on liquidity wise, but we're growing less expected than what we thought initially. And we have high utilization, so we have demand. LP are well compensated, and we are trying to scale it to do more reach, etc. Because the product is great. We have some market makers who deposited, who are gonna scale to, etc. But yeah, we're giving 10k, almost 9k ARB a day, split among ETH, BTC, and ARB. I think the split is something like 60%. No, I think like 40% ETH, 35% BTC, and maybe 25% ARB, something like that. So we are mainly ARB and BTC, but we have some market, mainly ETH and BTC, but we have some market also for ARB. And honestly, it's a great tool, because in current, we have what we are seeing last few days is intraday volatility. It means the spot and like the ETH, BTC are going to move a lot during the day, and sometimes reverses afterwards, like the day after. We're not necessarily moving a lot on a weekly basis, but on a daily basis, we have like 2, 3, 4% move almost every day. And if you use even CLAM, you don't make directional bets, you make volatility bets. And even sometimes if you want to make directional bet, you can hit an X10 on CLAM. Like yesterday, I had an X8 on some ARB position and X5 on ETH position. So you don't necessarily need to be right every day on your direction, but if you're right 20% of the time, you will still make money, because the multiples you make when you're right are so high with this intraday volatility. It's a great tool to use, like to bet on volatility over a 24 hours time frame.
Yeah,
and we have seen like you see it on the PNL chart. The PNL chart is high. I don't think there is any option protocol that has such P&L and at the same time such high fees.
Yeah, I mean that trader P&L speaks for itself. So,
And you guys have some other updates about RDPX V2, which has finally began after a long anticipation. Am I right, boss?
Yeah. We also released RDPX V2. So with RDPX V2, we are in a bit of a pickle at the moment because we had poor price action on RDPX, and we have been seeing some downtrend for the last 2 days. Honestly, I don't know what would justify it. I think there is a big part of the supply that is in the community, and at one point there was a panic selling of the token. We prepared for it in the mechanics of RDPX V2. So for us, it was needed to externalize the risk that RDPX price action goes like really volatile, especially to the downside. So RTETH holders, our synthetic ETH product, it's called RTETH, are protected against the downside. They won't be in risk of losing their collateral. They could take a small loss of 5 to 6%, but they're currently being paid more than 100 APR, so they will make it back even if that happens. And we have some put system that is in place right now. We are working and we are thinking of the possible best course of action to deal with the RDPX price action. And yeah, so it's been a bit stressful last few days.
I also think, that it's kind of a natural sell the news event, at least in my opinion. You know, a lot of people have been waiting with RDPX, and once they saw the news, and at least the way I saw it, there was some price action activity upwards at the first few days. So I think a lot of people just who were not really into it, who were just holding the token for a long while and waiting to dump it at the right time, waiting for these news exactly. So I kind of think it's like a cleaning process of the holders of RDPX. And right now, hopefully when the system is really in place and active, I think that your thoughts on this very special tokenomic model with 2 tokens are actually going to start being tested, and hopefully it's going to work out just like you guys planned. How do you, for example, explain this very basic difference that you guys have as an options protocol with a 2 token system rather than other protocols that mostly use just a 1 token?
So this whole idea of the second token was as a rebate model, because when you're selling options, and especially like I said in an option AMM where the sellers are not well compensated for the risk, if you want to grow your liquidity and to reach some kind of like threshold and to onboard market makers, and if you rely mostly on the community to provide, they won't be using sophisticated risk management. They won't be selling. They will always be selling volatility, and selling volatility has its risk. You are taking the fat tail risk.
Mhm.
Like think of early 2021 when the market kept going up and kept making 10% every week or something like that, and think of Luna or of FTX. Like those events, as an option seller, can completely wipe you out. So you need something there to compensate for the risk, and this is when the rebate token comes in place. And I think for me, it's a strategy. You need to have a strategy to grow your liquidity and to bring liquidity, so that either with relying on community or individual investors, or relying on market makers, and sometimes for market makers to notice you and for their business to be interesting enough to interact with you, you need to have a base users. So it's like the chicken and egg problem. You need liquidity to get more liquidity. So if you reach a certain critical mass of liquidity that is interesting enough, you can grow more from there. And I think that's the usage of a rebate token for me, to get there.
Very cool. Well, let's hop on to Muchstyle as well too here. Also, with Timeless trying to attack the idea of Uniswap LP fees and their kind of like lackluster returns in a different way as well too, and that's with their how do you call this over at Timeless, Muchstyle?
Yeah, so I think we need to talk about Bunny in particular, which is a timeless product. And yes, well, the goal is really to make LP something that's profitable for users. The way Bunny already with the V1 solved this was to get inspired by Curve and creating a VE token model with very interesting and kind of novel flywheels that essentially transformed a fixed UniV3 NFT position into a fungible ERC20 token and allow users to deposit on this fixed range and receive incentives. Those incentives are given in the form of OLIT, so an option on LIT, which is a timeless token. And such token can then be vote escrowed in a balancer pool, earning both fees from users looking to trade them, as well as like the increasing the similarly to Curve the reward that you get on your position. So the nature of the protocol really was built around stable liquidity provisioning. It's really ideal for any stable protocol or any LST provider looking to kind of maximize liquidity in a certain specific range, which is going to be heavily used, and further give utility and interest there. Now, why Bunny V1 was already so revolutionary is that not only do you have kind of protocols, do you give them the possibility to choose a fixed range on UniV3 to incentivize on, but also you allow composability for such positions. Because whenever you deposit on Bunny V1, you also then receive a ERC20 receipt, which now has also an oracle and can be used to borrow, can be traded, can be exchanged. It's not like tied to your wallet in a way that a Uniswap NFT position, I mean, it's also not really tied to your wallet, but it hardly has any use. Allowing composability on those has proved really, really tricky. So now what's really exciting in the Timeless ecosystem is that the release of Bunny V2 has been announced. Bunny V2 has a similar value proposition to Bunny V1, but is built on Uniswap V4. So we've been teased that already quite a bit, and we know what it will represent for DeFi anytime a new version of Uniswap launches. We essentially have two new kings on top of the leaderboard of the DEXs, right? We have the previous version that still is on top of both TVL and volume metrics, and then the new one that slowly climbs the ladder and then overtakes it once and for all. So where UniV4 really is special, in my opinion, already for stable LP, but also for volatile LP, which on UniV3 is mostly unprofitable, actually. Well, is that now you can have your idle assets work for you while they are used as liquidity. So whatever is not actively traded, whether because it's not in a bin or outside of the current shape, well, it can earn interest on platforms like Aave, for example, right?
That's and then, cool. So is this all done with the implementation of the new hook system that's coming with V4?
That's a bit of it is hooks, a bit of it is just the any shape liquidity feature. So, for example, let's say you are Lido, right? You have an LST, which is staked ETH. The one that's mostly used in DeFi is wrapped staked ETH because it's an LST. So you want to minimize impermanent loss for your LPers. So in an ideal world, you want your asset to be trading at NAV, right? So at the net asset value, which is given by an oracle, now also Chainlink, Redstone, there is plenty of those. So now you can tell a Uniswap V4 integration to kind of fetch this oracle price so that liquidity is sent in a center-heavy way, kind of always traded around the fair value of the asset. In a similar way that also Balancer already does, Curve V2 also does. Well, now that happens on Uniswap, and I think this is very exciting because not only you reduce impermanent loss for the liquidity providers, you enable them to kind of almost guarantee them to be on profit, but also you can incentivize them with a token of Bunny, meaning that almost like there is no reason not to provide liquidity on UniV4 through other places than Bunny V2.
Yeah, it's interesting how a lot of people are trying to address this problem of like lack or to increase fees on AMMs, right? Some people are trying dynamic fees that adjust based on usage. Other people are like with Dopex are implementing like an option system that provides additional yield for people to be able to borrow the assets and trade them like an option pair. You guys are working with Uniswap v4 to implement this ability to like pull in and take out assets. I think we've also spoken with like over on Flywheel we spoke to Infinity Pools and Panopticon. Like there's a ton of different like viewpoints on how to increase liquidity across AMMs. And I'm really happy to see all this like testing as well too.
Yeah, it's true. And I think already concentrated liquidity shows that, you don't need to rely on the kindness of the heart of the liquidity providers anymore, because even with fairly shallow liquidity, you can have really high volumes, right? Also, a protocol called Maverick kind of really proving that we're really shifting in a way to very thin liquidity for traditional standards, but traded in a very, very, very concentrated range. And so UniV4 perfectly addresses this problem, in my opinion, because we have this concept of center-heavy liquidity, edge-heavy liquidity. We have shifting liquidity, where liquidity can really move around the price of a stable. So we can really have, forex trading scenarios like now enabled, not because of the kindness of the hearts of liquidity providers and arbitrageurs, but really just by the fact that there is an oracle for it, same as there would be many sources to base your price on in traditional finance. And then you can also, once you have this very concentrated liquidity, put a discount on fees, and finally, in my opinion, compete with traditional finance. Then one other aspect that I think could be interesting is that now we've talked about like stable providing, so whether that's through stable coins, Angle Euro, USDC, wrapped state ETH, and so on. But what about volatile tokens that we all love so much, especially during a bull market? Prices tend to be extremely volatile, and sometimes that's caused by the fact that liquidity is not deep enough, right? That trades cannot happen without big slippage. Well, that's when these different shapes of liquidity can be useful. And if you know the price of an asset across different places, and you know how to position yourself, you also have we talked about these dynamic fees, right? I think what makes really interesting here is that even when you have little liquidity because there are not enough LPers and you're outside of a common price range, well, now you really enable LPers to be profitable because there is going to be a premium. And you can also detract toxic order flow from the equation, because thanks to the Uniswap technology and the coding in the V4, you can really exclude those traders from the pool, or really just charge unreasonable fees that make the result of the trade not profitable.
Yeah. And so we also have two other guests. They're joining today. We have Al Biwara and Metadata from Smilee. So I found them a couple of weeks ago after they had written a nice little write-up about like Uniswap fees and about how you can improve it. So we're all here today to talk about that. So welcome guys.
Hi everyone, nice to meet you all. It's a great pleasure being here. Huge fan of Leviathan News. So
thank you. Yeah. So maybe you guys can talk about like how are you guys trying to address like increasing, like you guys have built an options protocol, right? That allows for I think similar things to like using the Uniswap LP to be able to make these trades in option style. Is that correct?
Yeah, exactly. So it's the story behind Smilee is quite interesting. We started because we were doing some LPing and checking, what was going on with DEXs. Quite a long time ago by now. We were looking at the return, and also, we always have this TradFi angle as well, because we all come from TradFi and Smilee, at least the finance guy. So after DeFi summer, when interest rates then start growing in the TradFi space, we were like, not sure this is the best for DeFi, because we went from DeFi is the place to go to find returns to DeFi actually, at least for the risk-free or yield related return is no longer comparable to TradFi. So it all started like that, and we start thinking, maybe there is an overhang of liquidity on DEXs. It was more than a year ago by now, and so we said, how can we work on something? And we started looking more and more at DEXs LPing in permanent loss, this kind of concept, to try to find a way to kind of take out of liquidity from the pool in a way to make a return more interesting. And by studying that, we realized that actually impermanent loss, for us at least from our point of view, was not just a bug, but potentially also a feature of the system. It could be used to create new stuff. And studying the function, we realized it was perfect, for instance, to mint options. So we were among the very first to kind of work on this concept. You hinted at Panoptic before, for instance, that we know very well. They also are obviously working on that almost at the same time. Although they publish in more research paper, we focus a bit more, on just the product. So our paper are a bit less common, it's more rare, let's say. And so we start working in permanent loss, and what we crafted is a protocol that takes simulate DEX liquidity. So we are synthetic actually. We use DEX for swapping, but we don't really take LP tokens. We simulate DEX liquidity, so we give the same payoff on a DEX LP to the liquidity side of Smilee, so the vault that collects liquidity, and we use that liquidity to generate options, but actually we craft them in an exotic product that is called impermanent gain. That's the opposite of the impermanent loss, but has the same similarities to a portfolio of options, basically. Because we think this is a new product very native to DeFi that can really play a role. So as you see on the landing, for instance, it simplifies the experience for DGen. That's what we believe, what we discuss with user, and the feedback we got from our first trading competition. Now that the new one we are doing. So we're trying to innovate not just in the way you mint options and source liquidity to mint options, but also in the way the product is structured.
Yeah, as somebody who's traded options as well too, like I don't particularly like the impermanent game language. I get it. Like people in crypto like don't have the.
I know that it has been misunderstood in the past.
It's like when you trade options, like you're more focused on your like dollar amount, right? Like, am I making, like when I enter into a trade and get out of the trade, is my dollar balance higher than where it started? And we've got this like weird thing in crypto where people don't understand that when they use Uniswap or an AMM system, they're essentially setting up a quasi options trade, and like the end goal of it is not to like get more assets than you started with. It's really to have the ability to end up with a higher cash balance than you started with, and I think that's lost on a lot of people. But people probably it's probably just a retail thing where people have some assets, they put it into a LP, and then they have like less when they end up like, oh, like I had 10 ETH and now I have like 5. And I missed out on all this movement. But they swapped they swapped their delta for earning theta or being like short gamma.
Yeah, I kind of totally agree with you. In the end, we discussed this thing internally quite a lot, obviously, and also with other people, also with Bossa. So we discussed this thing in the past. It's obviously option trading is interesting, is cool. Is complicated somehow, and we think to bridge, at least we want to try to bridge a bit, not just by simply doing more education, which is always obviously core, but also to try to make a product that is in between to what people in DeFi experienced or kind of know at least, or somehow know, to what it could be in the end option trading as a whole. Coming to LPing, I agree with you. that's the correct way of seeing the investment you are doing, basically.
Yeah. And so maybe I can get from this kind of like an open question for anybody, Boss or Meta or Roger. It's like, like when we're looking at like increasing returns on these Uniswap AMMs, you're really trying to increase the implied volatility of the potential trade, so that like when you actually have that trade towards the end, your captured fees are in line with what you would find on like a centralized exchange. Like you talked about, what's it called? I forgot. What's the options exchange called?
Deribit?
Yeah, Deribit. Yeah. So like most of the problem is that like Uniswap AMMs are not matching the fees that you're placing similar trades on Deribit. And so for like large scale market makers, it's not the best system to come in and use, or at least there's like different risks and they have to like discount the Uniswap AMM trading.
I think
Yeah, I mean, in the end, it could be. Oh, sorry, Bossa.
Go ahead, Matteo.
No, I just want to add that in the end, if we had a properly developed market, those things could be kind of arbitraged out. The problem is also we have missing components or still not like enough efficiency in DeFi sometimes. Because if once in future you can really kind of hedge impermanent loss, that is hedge through options or impermanent game exotic options, basically at an implied vol that is maybe different that you may have on a checks or on CFI. You can build position that in the end arbitrage them out and you get the results somehow. Obviously, you need more efficiency, especially in the DeFi side of the story for selling option or this kind of thing to really balance them out.
I think as DeFi grows, we will attract more volume. It means more fees, and Uniswap will start. And like Uniswap V3 is a tremendous improvement above V2 in the capital efficiency as we start to develop new capital efficiencies. And as we have derivatives based on Uniswap or on payoff, etc., attract more. And DeFi has been growing. It just like the trend keeps going up. Centralized exchange. Right now we see pools with lower fees doing even more volume than the big fees. It's improving, and as improving, it will reach out to a certain level. What is interesting to build on Uniswap is you're giving the people the same payoff, but you're giving them more yield to compensate the resting people. The impermanent loss, etc. It's people source right now in the DeFi don't understand very well the product, and they hear the name loss and they say they're losing something. Impermanent loss for a 2x, like if the price gains 100%, impermanent loss is 5%. It's nothing to worry about because you would have made so much money in notional. And permanent loss is to be worried to the downside. And I think in case of Smilee, when it's used to sell options, the payoff can be like options, but with Uni V3 and even with V2 on fat tail events, it can be way better than options. So it has an usage when you want to bet on those fat tail events, and even on small, very fast variation, it can be even better than options to capture some strategies, and which is good. Like with Clam and with Smilee, it's really easy based product, and everyone can win in a way when they can optimize the yield and getting the payoff they understand, and not going into like the complex option gibberish, etc. And you can even have later on, we have had this demand for Clam. People just want an automatic vault that will manage risk for them and that will give them the yield, and they will accept the cut. And that's a way of bringing some kind of cool financial product that will earn more than their LP to those masses that want something in DeFi, structured products in DeFi, and just don't want to LP or don't want the basic LP manager that will be gamma short and then we lose a lot of the time. They want more expertise, and we need good product to build that expertise on, basically.
Yeah. So like what in your heads, having built in the space, is the best way to like properly price these LPs, right? So the big question that we always talk about is that the cost of keeping your funds in Uniswap LP is just not enough. Like when you look at like loss versus rebalancing or some of the other measures that people use to compare like centralized exchanges versus these Uniswap LPs or AMMs in general. Really, it's the lack of fees that they're generating, and there are a couple of different ways to solve it. So maybe you guys can talk about like what you guys think is the optimal way to bring a healthy amount of IV back into these markets.
Yeah, I mean, on our side, so obviously the very first point in the mid to long term will be what I tried to summarize pretty quickly before, that is having a fully developed DeFi space for all this stuff. So not just for the DEX level, but having the derivatives on top, which means also options and products that can hedge in permanent loss, and people that can arbitrage against the C5 world, and at the point align them all. Align the pricing everywhere, and not simply and not having like protocols or area that are not aligned with others. So, for instance, one may say make way more sense to simply be on Deribit than at the point on Uniswap if you want to have the same payoff, this kind of stuff. So if you have a properly developed market, which requires not just the actors, but also the size, so the volumes and the technology behind, you can reach in the long term something way more interesting, probably. And also maybe, this is an additional step, the discussion about AMM versus order book will also at the point we partially solved, because if you have pricing properly done, also the topic becomes less of an interesting stuff. Besides this very long-term stuff that I'm saying, coming specifically to what it can be done in the short term that we try to do, obviously the design choice of our protocol, and people may have another one. But for instance, in Smilee, as in the paper you refer to that we done, you can see that if Smilee utilization rates decreases, actually we are not putting the money into Uniswap itself, but actually reducing the exposure. Which means if you come and buy volatility on Smilee and you pay, at the point we know the LPs are paid for the risk they are taking, and we are happy. If you are not coming and buy, no issue, but we are not taking the risk for them. And as a result, you have a situation where, based on the simulation we've done that we could discuss, but we have a situation where you have a higher return than Uniswap for similar impermanent loss, or similar return but lower impermanent loss at the point. Because in the end, what we try to focus is to avoid, to provide a way to provide liquidity like on a DEX, but without exposure to toxic order flow, or at least with a different exposure, a very limited exposure to that. Because we believe it's kind of the major problem at the very moment, exactly because those arbitrage opportunities are not there exploitable yet, at least. So, this was kind of our answer. We don't want to be so much. That's why we are synthetic. We like the concept. We know the market. We believe the market will be there and will reach that equilibrium level. At the moment, we don't want to expose you to toxic order flow where you're not paid for the risk you're taking. So if you don't pay me enough, basically, where enough is an implied volatility that makes sense. Based on our AMM, and okay, we can dig into the details, but if you don't pay me enough, I don't even want to take the risk. So this is for us the way forward. I don't know if it was clear, but
yeah, that's was good to hear. Well, cool. Did you guys? I wanted to talk about a couple of news stories before we wrap up. So. Metadata. I know you guys have a trading competition going on right now, and people can come and check that out. Before we wrap, so before we wrap up, I wanted to talk about. Well, yesterday we talked about Bankless, and there have been ongoing public good funding or just like treasury disbursements from these large L2s. And today we had a post from Zach XBT, who has kind of gone and looked at some of the optimism retroactive public goods funding in round 3, and looked at who is actually like putting their names up there to try to get funding. And he found that there are several well-capitalized VC projects who are currently in the top 100 for voting. Many who have raised millions of dollars. So like Zora, I see here, raised $50 million plus. They're applying for a grant. Synthetics as well too. Hop, Tenderly, Snapshot, Open Zeppelin, all of these have raised well over $10 million and are here asking for more. And Alchemy here raised $545 million and is asking for a retroactive public goods funding. So what gives? Should we be outraged here? Is this something to burn the house down for? Garrett, you ran?
It didn't go to the question was for me actually, but
yeah. Well, this
I think
I mean-
I can comment on it if you want. Like I think optimism like was very generous even its grants problem, and I think money is not necessarily being well used. For me, it should be used to foster innovation and to like have some kind of real structure with you will have some kind of an incubator. You will help new projects and new tech to emerge, and I feel a lot of protocols, etc., gain some influence, and I've seen it with the STIP. It becomes like lobbying. It becomes like politics. So, can I get a bigger share of the pie? Can I get this? Can I get that? And there is no, I feel like long-term thinking. There is no innovation foster. There is not helping those small projects because there is not the proper structure to do that. And I think that's a problem for me for a lot of chains that won't see necessarily the growth because they don't help the builders enough. They don't have the structure for, and there is a lot of money that is misused, and there is a lot of like deals made in the back, and people voting for, I vote for you, you vote for me, that kind of agreement that I think will hurt a part of the industry going forward. And we need to rethink how governance overall works, because with what I've seen, there is very serious problems on how things are.
yeah, I totally agree. Actually, we it's a topic I've discussed quite a lot at DevConnect. I don't know if any of you was there, but there were quite a few interesting sessions about DAOs, how to deal with this kind of thing. I guess there are 2 points to consider. On one side, the major issue, my point of view, is that you create competition between protocols to simply grab the money. Sometimes, we kinda saw it with some of the recent initiative. You have to find a proper way to really give the money to people that need, but not like force the other to ask them, even if they don't want them, just to stay competitive, which is pretty bad. One area that I think DAOs, chain ecosystem DAO, chain DAO, huge player shall focus on is more like building infrastructure, but not simply the tech infrastructure. I've been discussing this quite a lot with other protocols in the space, and we all kind of agree. Let's say I'm a layer 2, and I have a lot of resources to push up further my ecosystem. I focus on DeFi specifically, obviously, because that's the space I know the most. I can actually support, co-build a lot of infra level things needed for DeFi purposes specifically, because infra is always about the RPC or the particular oracle to do some stuff. But when it comes to DeFi, before what I was saying, we need protocols that can be interoperable for real to create arbitrage opportunity that price better the stuff, so traders can really jump in even from the more, we say, CeFi institutional side of the story. We need this kind of stuff, volatility oracle, for instance, on chain for protocol, cross-protocol interoperability for options, perfs, so on and so forth. There are plenty of stuff we've been discussing, risk tooling, cross-collateralization stuff. Those are things that a single protocol cannot really build. Because, if I do at Smilee, first, the other protocols are not interested, and second, I'm investing to support the others. It's not that easy. Opin kind of did it for the option, and many people built on top. But, for them, it was, they needed to build it at the time. But, it's not like they could simply say, I crafted this kind of infrastructure needed for them all. And I think that's an area... incentives or grants shall focus on. how to support this kind of cross-protocol needed stuff to bring, composability and money Lego to the next level. Because we always say this, but then, there are a lot of limitations when you start for building for real and not simply considering the high-level picture.
Yeah. Well, I got one last story to touch on before we wrap up here. We saw CRV USD added to, or Aave. This currently went live, I believe, just a few hours ago. Just look at the market right now, and it doesn't look like anybody's deposited yet, but the market is there on V3, so that'll probably see some inflows over the next little while. And then, Garrett, you can probably tell me, like, what's going on with the CRV borrowing rates. Like, I'm looking at the markets page right now, and look at that. We're at like 20% borrow rate right now for Rapstat.
And don't believe those SFRAX, ETH, or TBTC. If you click into either of those, you'll see that next time anyone interacts with the contract, even if they just deposit $1, it's going to spike also to double digits. This is the result of a proposal that went through a few days ago. This was basically there's some thought of at some point automating this idea of like the default borrow rate, but for the time being, it's being set by the DAO. Because of changing market conditions, the fact that like lending protocols everywhere are charging like fairly hefty rates, there was basically need to raise the borrow rate in order to kind of encourage some people to repay loans and push Curve USD back up to peg. It was trading almost half a cent below $1, which is kind of the most unacceptable depeg it had seen to date. And already, even just as like the market was like reacting ahead of these borrow rate changes, it's pushed back up to 99.692 cents, as you can see there.
Is this the result of Prisma and the demand for CRV USD there?
It's possible. I wouldn't necessarily expect that's the case. I think just generally across the board, borrow rates are up. So that'll be my guess.
Yeah. And oh yeah, one last thing. So speaking of Prisma, they also have a vote that is going over the next few days. They're going to be raising the interest rates again from 2% to 4% on all collateral. And this, again, I think they're seeing the same issues that Liquidity was running into, where the interest rates were just not high enough. And you saw too much people like just coming in and minting the stablecoin, dumping it, and then going to farm with it somewhere. So hopefully that can bring the average collateralization ratio down. Right now it's about 223, which is like pretty high. If we look at the vault list, the redemptions page, it's pretty much 200% is the bottom right now at size, maybe even a little bit higher, which is pretty high for a Liquidity style.
It's still a
protocol.
touch better than Liquidity. I think Liquidity is around 300%. Not 100% sure on that, but that's,
Liquidity is way higher. Yeah, but their interest rates are their interest rates are fixed at like 0.5%, so it's totally different.
Well, Prisma also was using only wrapped forms of Ethereum, which generally earns in that 3 to 4% range. To be charging 3 to 4% borrow rate on assets that earn 3 to 4%. It's still very much in the territory of like loss leader.
Yeah, exactly. And so hopefully these changes help bring the collateralization ratios down. I know people would like to have more efficiency when they're borrowing here, and hopefully it keeps people from just like using MKUSD as a way to go out and farm SDI, which is the primary problem, right? You want them to put it into one of the farms here, which still have really good interest rates. Looking at these, so if you're interested in Prisma, it's still going. The high yields are going to be around for another couple weeks, so definitely something to take a look at. Well, that's going to wrap it up for today. Thank you, Boss Imp and Abawara and Metadata for coming on, and also Magistal as well too, who had to drop off.
Thank you, guys. It was a pleasure.
Yeah.
Thank you. Really great pleasure.
Yeah, thanks. And we'll see you back once you guys have some more news to break, and here on Leviathan News.
For sure. Thanks a lot for coming, guys. Really enjoyed it. and hope for a lot of success and a lot of new activity in this upcoming year and maybe even months in the options scene. One of the narratives I'm most intrigued, fascinated, and looking forward to.
Yeah, definitely. All right, thanks everybody, and we will see you back tomorrow. I believe Amplis is coming tomorrow to come and just
Nice.
like shit post with us all day. Maybe give us some info on what's happening at Gearbox.
Sounds classic.
All right, see you later, everybody. We'll be back tomorrow. Bye.
Bye.